Yo, good morning, traders, and happy Friday. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky. Today is July 10th. Guys, we're almost through the summer already. Drop some W's if you made some money in the market. Drop some W's if you've learned something here in Market in the Morning. Today, we're going to have a phenomenal episode, a banger to end the week. So I hope you guys are excited. We're going to be joined by the one and only Nalab soon. We're going to cover some gold charts, S&P, NASDAQ, and any big headlines that come out and will move market. So guys, hit that like button if you're ready because Market in the Morning starts right now. All right, good morning, everybody. Good morning. What's going on, guys? Ted, good morning. Melvin, hello, welcome. What's going on? Piyush, Silver, Famous, Matt, what's going on, guys? Good morning and welcome to Market in the Morning. So let's start off with gold. Gold edges lower as oil-driven inflation risks persist. So the main two things we are going to be keeping a very close eye on today are going to be gold and oil. Oil is really going to be that sort of not make or break, but decision maker for us to let us know, okay, listen, oil's continuing to move higher. Let's look for some more downside on our equities, or vice versa. Oil's coming back lower. Let's look for some more upside. More diplomacy headlines for sure. We could check those out. So let's go through our breaking news tab, see if anything came out. But you guys know we like to start with our high impact first, because that even filters out some of the breaking news. So we're not going through all of those tabs. So high impact 1 day ago, this is July 9th, 1 in the morning. I haven't decided on pulling out troops of Greenland. So we haven't had anything since yesterday in the morning. So we covered this in the previous Market in the Morning episode. If you do want to go over it, the replays will be in our YouTube as well. So we could even skip high impact at this point, seeing that nothing high impact has come out since then. Yo, John, good morning. Sean, hello. LG, what's going on, guys? So let's see, breaking news. This is 9 minutes ago. Talks aim to address implementations of the US-Iran MOU and issues that triggered the recent US-Iran escalations, including disrupts over navigation in the Strait of Hormuz. So again, this is the biggest deal right now. How is the strait looking? Is the strait open and oil is flowing and ships are going through, or are they closing the strait again and we're going to see some more backlash at that point? If we take a look at our gold charts, I'm sure you guys saw yesterday's gold price action. We got absolutely nothing. Gold was not giving us a strong trend. It gave us an overnight move, and then during our New York session, this is here with us, did absolutely nothing. We stayed within this box. So when price is trading like that, it's trading sideways. We do not want to put ourselves in the position that we're going to lose money left and right where we're taking just trade after trade. So let's start real quick. We will look at our previous day high, previous day low. Just mark that out. Get an understanding of the strength we had on that daily time frame. Now, what I am seeing here on the daily is we did have some strength in this last candle. We had volume pickup in this red candle on Wednesday. A longer lower wick was created, which tells me that everybody that was selling below 40.077 all the way down to 40.20 down here, these are trapped sellers. These are people that sold gold and then price reversed on them. So they're looking to get out of their position. They're looking to buy back at some point. So, and remember, guys, we talk about pain in the market, pain and gain in the market. These people down over here, they are in pain right now because price moved away from them. So the higher we go, the more pain there'll be in and the more gain there will be in the market. So something I'll be keeping an eye on gold myself is going to be if we can get back above our previous day high. If we can get back above our previous day high with some strength, then it would look like we're set to have a little bit of continuation, even if it's back up towards that recent lower high. Mel, what's going on, Mel? How are you? Great trade. Yo, shout out to Mel over here, head of HTL. Great trader. Good analysis. We'll bring you on as a guest one day. Hit me up. Let me know. We'll set that up. So 4-hour time frame on gold. Same situation where we're finding ourselves, we were creating the lower lows and lower highs up until very recently. This is Wednesday of this week. Wednesday, we were able to move higher. We still did not breach the recent lower high that we had from, this was Sunday at 420.22. So with that being said, we want to see, how does gold want to react? Do we want to try to make our way towards these highs for a breakout, or does that fundamental trend that has been keeping us bearish continue in that favor? So we'll keep a very close eye. We'll use our market terminal too to say, okay, right now we do have that bit of a mix. We have our swing trading bias showing us possible bullish because we haven't swept that recent low after creating a lower high. We have our day trading bias showing us slightly bearish. So there's definitely a bit of a disagreement, a disalignment in when it comes to gold right now and some of the fundamental aspects. So when we're looking at the trading bias, day trading bias here on gold, slightly bearish. What's supporting this bias? Well, we see Middle East supply risks keep crude risk premium prices elevated. And again, we can look back at oil here and see, how is oil trading. Daily time frame on oil. Well, oil took a pretty big hit yesterday. We see we already breached our previous day low. So as long as we remain below our previous day high and can possibly try to make our way back below our opening price today, which is going to be right here, then we can expect some more downside on oil, and that could lead to some more upside on things like gold and the S&P and NASDAQ. So let's mark this out. This is our open price on oil right here. Great level to keep an eye on. I'm a big fan of the previous day's high, previous day's low, and today's open price to get an understanding of, did we break one of these levels? Are we above our open, below our open? That helps us also get a bit of a catalyst, an idea of that trend. Hey, Elise, good morning. How are you? Hope you guys are doing well, man. Let's end Friday with a banger, guys. Nalab's going to be joining us in about 15 to 20 minutes. We'll cover some gold and S&P and obviously some oil here first, and then we'll break it down. If you guys have any questions, drop it in the chat. Let me know what you guys are trading as well. We're going to kill it today, guys. I can tell. So something else I noticed, right? We had this area of support is no longer relevant. Why isn't it relevant? Because price did not respect it. When price doesn't respect our key areas or areas that we mark out in our pre-market, then we do not want to be respecting them ourselves or expect markets to just randomly start respecting them, right? We've been pushed through it too many times. This zone is no longer relevant. The next area we see on oil would be these higher highs, lower high, lower low, lower high, lower low. So we'd want to see if oil can find some resistance around that $74 mark here. So that's what I'll be keeping an eye on oil, $74 for a possible short. And that would be following that trend of, we broke previous day low. That whole US attacking Iran is not going to have the biggest of impacts anymore. We saw that. Listen, guys, this whole move right here on oil was the Iran and US escalations. This reversal we had was that ceasefire. But the question now becomes, how does oil want to react? Because there is still going to be a supply issue, just like Imre mentioned in previous episodes of Market in the Morning. Some glamour would be good in the show to attract. We'll see, man. We'll see. So looking at the hourly, not really seeing much here on gold. Let's take a look back at gold. I'm sorry, that was oil we were looking at right there. Let me turn on in the settings on Trading View. I could actually turn it on so the watermark is shown in the background so you guys could see what chart we're looking at. So that way, if anybody does join mid-session, they're able to tell and not miss out. So gold, on the other hand, was breaching the previous high. So that is a higher high. It is trying to hold a higher low. This purple zone was the area we were looking for yesterday that we did not test. We ended up testing it this morning, and we are holding it. So right now, we would want to see if gold can make its way back towards those recent highs that we were just trading at just yesterday. 30-minute time frame, see if we have any key levels. Look at how strong this purple zone was, right? Very strong level. Markets reacted to it multiple times. It is a key level we want to keep an eye on, just like our previous day high is. Take a look at our previous day high. Now, a trick you guys can do, guys, if you're marking out zones on a recent time frame, like let's say you wanted to mark out this area here with the rectangle tool, and you want to know, is this really that strong of an area? Is this something I can depend on? What you're going to want to do is you're going to want to drag it out to the left and see how price has reacted to it in the past. If we see something like this, where it has multiple tests, where it was resistance, support, tried to act as support, resistance, this is again, resistance and resistance. This is a very strong key area on gold around 41.33 to 41.38. So guys, 41.33, 41.38, that's what we're looking for. Lexi, what's going on? Let's get it. Happy Friday. We're going to kill it today, guys. We're going to kill it. Now, again, we have to come up with different trade scenarios. In our market routine, we have to come up with different scenarios so that we're prepared for anything to happen in the market. So that would be trade setup one. If buyers can hold these recent lows, we would look for gold to make its way higher, looking to target that 41.30 and then a possible break and retest. But for the time being, this is our range. Now, on the flip side of that, we could also be possibly looking for some type of drop and reversal after sweeping those lows. Now, if we do manage to break these lows and remain below them, then we're going to be using this purple area as our resistance point and can look to short it back to that next area of support. Not the biggest of moves. I really wouldn't be expecting the hugest trade to happen on gold today. It's Friday, and what's cool too, guys, because it's Friday, we can take advantage of looking at that weekly time frame. How is our weekly time frame looking to close today on something like gold? Okay, well, gold, it looks like last week we had our first green week since early May. So it has been 56 days since that last green week. We finally had that last week. And we did breach that previous week high momentarily, but now we're looking like we're trying to close back bearish. So again, something we can do today, guys. Mark out the open of this weekly candle and say, okay, this is the open of the weekly. Why is this important? Because I know that if we stay below this opening price, we are closing red on this weekly time frame, and we are not looking for a reversal going forward. And on the flip side of that, we break that opening week. We know that we're green on this week, and this, yes, can possibly be an area that gold starts to pull back. Now, this isn't just any random area. Remember, guys, I'm a big fan of looking at those percentages, right? It's important we look for key psychological levels because those are areas that every institution and any trading strategy are looking at. Key psych levels involve any price level that ends in a 25 or a 00. So 5,200, 5,000, 4,800. It would also be like 4,100, 4,150, possibly 4,175 if we're going by 25 increments. So what do we want to see? Take a look at this. Take our measurement tool from high to low. Gold moved 30% from its all-time highs. That is a major pullback. Gold does not like holding those lows too long. We have to remember, too, something we've been covering in these Market in the Morning episodes is that with such a strong pullback like that, this is getting institutions ready to look to buy gold again. Institutions were not looking to buy gold when it was at all-time highs of 5,000, 5,200. This isn't just us returning to price here, guys. These were brand new all-time highs. This whole entire move right here was all gold all-time highs. So quite honestly, I wouldn't even be surprised if we do end up failing and we want to continue lower and possibly see that 40% drop on gold. 40% drop on gold would bring us to about, I want to say the 3,000s. Yep, 3,200, 3,300 right there. 40% drop on gold would bring us to 3,300. So something to keep an eye on, something to be aware of. And of course, we could also look at pivots, right? We talk about there being pain in the market for there to be gain in the market. If people have been buying gold since, and we could look at this recent pivot, October 2025, everybody who's been buying gold in this huge move, all this volume, they are now looking at a red position, not a bearish position. They're looking at a red position because they were buyers of gold all the way over here on this huge rally, and now gold had this massive pullback. Something to consider. Daily time frame wise, what we're looking for at the moment, ideally looking at the structure we're seeing, looking at this rejection candle, I would want to see how this 30-minute closes. If we do get a bearish candle here that forms something like that, I'm going to be looking for continuation back to the downside to target 40.75. That would be a gold short. We have our market bias also giving us that swing, that day trading slightly bearish. We have our fundamentals lining up. And what price target do we have here on GC? Well, let's check our XAU USD. And that's going to give us 40.40 down over here. Also some support 40.90. So 40.40. That's way down over here. That's below our previous day low. So we haven't taken out that. Have we taken out previous day high? No, we have not taken out previous day high yet. So it would not be unheard of that we have a big sell-off. We break that previous day low, but we always want to ask, is it a realistic move? Right now, I don't think that big of a move would be that realistic. So something I'm looking for, again, is those intraday moves. Can we close somewhere lower here on the 30-minute? We see we're already trying to break lower. That's helping give me confidence, but we're not selling down here. Why are we not selling down here? Because guess what? Price has shown buyers holding up every time we've come into this zone. So we don't want to sell lows. We want to sell high, buy low. But that doesn't mean we want to just buy every dip, right? That's when context comes into the market, and context is so important. So if we get a strong break, we close somewhere on the 30-minute below this purple 40.94 level, that would be a pretty nice opportunity to go short on gold on that next 30-minute, which opens at 9 a.m. Eastern. Let's take a look at NASDAQ now. I know a lot of NASDAQ traders here. I'm a big fan of NAS myself. And we could take a look. We could start with market, see if any fundamentals, any drivers have changed on the NASDAQ. So showing us slightly bullish and slightly bullish. And something we're going to remember from our past sessions is that markets have been starting with a bit of a dip and then just a V-shaped reversal to the upside on the NASDAQ and S&P. So what are we going to be looking for? We're going to be looking for markets to repeat themselves. Now, it doesn't happen all the time, and no price action is the same every day, but markets do like to show repeatability in some of the price action we see. So what's supporting NASDAQ to the slightly bullish? Chip and AI sector strength draws fresh growth-focused inflows. That's great. Chip and AI sector, we've been covering this for so long now, guys. And let me know in the comments, man, do you think there's an AI bubble? Because every time somebody says there's an AI bubble, AI and big tech just moves that much higher. It's just continuing to move with strength. There is not much upside that's blocking us right now when it comes to AI. But we have to remember the Fed's hawkish pivot, and that is going to give us a bit more of a slightly bearish tone for equities, especially the NASDAQ. Fed hold and divided minutes cap near-term rate hikes. So this is great. This is capping near-term rate hike risk. Great. This could give a little bit of an ease. This could let the market breathe right now. Markets don't need to stress about the whole forward looking of we're going to have a rate cut soon. Oh my good, a rate hike soon. Oh my goodness. Oh my goodness. Nope. Rate hikes are chilling right now. We could even take a look at our Fed watch tool and see how that looks. Say, okay, we have our next Fed meeting in 19 days. It's going to be July 29th. And guys, you could come back here for that FOMC meeting. I will be covering it, possibly with Imri as well, so that'll be pretty cool. But take a look. This is our July 29th meeting. We're looking at compare right now. So compare basically will give us multiple bars for each range. And each bar was from, look at this, trade date 1 month ago. Probability, 87% chance that we hold rates. And over here, right now, we have a 75% chance we hold rates. This was a rate hike, was only a 10% chance. Now it's at a 24% chance. Now, 24% chance, that's not going to really be that, oh my goodness, markets are freaking out, that make or break. But it does show that increase in the odds of a rate hike. Yes, Sands, exactly. So Nalab's going to be joining us very shortly, possibly in the next 5, 10 to 15 minutes. Very excited to have him on. Always a great show when we have him on. Smart guy, great trades, great trader, and of course, great founder of the one and only Market AI terminal. Guys, if you don't have Market yet, you want to sign up with it, you go to marketedge.ai, use discount code KEV, K-E-V. That will save you 10% off of your Market subscription. I 100% recommend it. And I'm not just saying that because I do these episodes of Market in the morning with you guys. I'm saying it because I know how these markets move, and how these markets are moving lately is purely and very strongly off of big headlines that come out. So here we go. 4 minutes ago, Trump administration seeks to exclude Israel from U.S. strikes on Iran. Okay, interesting. Canada gains 18.2K jobs in June, surpassing 10K forecast. Wow, it's a pretty low bar they got going on over there in Canada, but that's all right. It is what it is. Everyone wants to, yeah, exactly. Alligator, you got it. Everyone wants to call the big short. It's much easier to ride the market optimism. You're 100% right on that. When we're able to find that optimism in the market, that's when we have to, as traders, take advantage of that. Okay, boom, there's optimism. Rate hikes are being put on hold right now. Markets are happy. That's optimism right there. There's three emotions markets move by: optimism, uncertainty, and surprise. So if we get some type of big surprise, war's completely over, I'm not going to bomb them again. Great, that could be a surprise. We know we've seen tons of headlines, though, suggesting, oh, peace deal this, peace deal that, and then we end up attacking anyway. So markets have really come a bit more numb to those types of headlines, and we do have to be aware of that, right? We want to be caught on the right side. We don't want to be reacting to every single headline that comes out, knowing that there's a good chance it's not going to have that big of an impact. So very good stuff there, unless, of course, it is something major. Check our economic calendar. I don't believe we have anything today. Today is Friday. We have oil rig count at 1 p.m. That is not something that, first off, we'll be covering here at Market in the Morning, because that's at 1 p.m. versus we end the stream at 10:30. And it's just not something that impacts the S&P and NASDAQ. It will probably impact oil, but that's okay. Next Tuesday, we have CPI data coming out. Last month, it was 4.2%. That is insanity. Now we're looking at a 47% chance with our prediction market that our June inflation annual CPI comes at 3.8%. 3.8. Now we don't have just yet the minimum or maximum on that CPI year over year. So we will keep an eye on that, and I'll keep you guys updated as the time goes. And we probably will have that by Monday. So Monday's episode, make sure you guys are here. We'll give you a little insight into CPI. And then when Tuesday comes, we'll cover it live and see if we can get a nice trend. For example of how to use the minimum and maximum, if we're looking at core CPI over here, year over year, we saw forecast is 2.9%. Bank forecast also 2.9%. Prior was 2.9%. And the minimum, it's giving us 2.8, and the max is 2.9. Now, if we hit our brain icon, it's going to give us our playbook. And what we can do is we could hit our impact on, and we could change this to whichever asset that we're trading. If I'm looking to trade gold, I'm going to change it to GC or XAU USD, whichever asset you want to change it to. GC and XAU USD will give you the same results in market because they're the same asset. One's just futures, one's Forex. So if we see that CPI, this is just core CPI, again, just an example of here of how to use the playbook, comes out higher than expected, then we know that that is very bearish for gold. If it comes out lower, then that is very bullish. Now, not so much, okay, if it's forecast 2.9 and we come out at 2.9, that's going to be bullish. No, because that's on forecast. If we come on forecast, we expect range-bound price action. We do not expect that big of a trend. If we do come out way above, though, let's say we come out at 3% over here for CPI, then yes, that is above its window. That is above the maximum. That will lead to a very strong trend. And again, that will lead to a very strong bearish trend. For below, we would have to come out at possibly 2.7%. That would be very strong outside below the expectations and would give us, yes, a very strong bullish trend. Right now, we do want to wait and see how it comes out. We do not want to be front running that move just yet, especially because the past month we've seen a huge dip in oil, and we know that's going to leak, oil leak into the inflation report to start to come down. Now, if we look at our economy, though, we will see our economy tab here on market. This gives us all of our reports on a chart basis. So we're actually able to visualize how have these reports been coming in. Are they in a bit of an upscale where they're uptrending or upticking, or are they pretty range bound? As we see, usually PPI is around that 2%, that 3%. But lately, PPI, the last PPI we had in May, which PPI is the production, is 6.5%. PPI usually leads into CPI. It's usually that forward guidance of CPI. So the question is, does this have that big of a pull where core CPI continues to notch higher, where it goes from 4.2 to 4.3? Is it strong enough to hold us at 4.2? Or do we start to see a decline because we know oil prices are starting to dip too, and lower oil and lower energy leads to lower inflation? So something to keep in mind. Employment data down. Unemployment rate was down 4.2%, so it's down 0.10% from the last reading. This is June's reading. We did not get July yet. Did we get July yet? No, not yet. Non-farm payroll was down 55%. Average earnings was up 0.10%. And initial jobless claims was down 3%. Nothing major there. I do like this little update we have here where it adds the percentage change on those reports. Makes it that much easier for you guys to read and understand those reports. All right, let's see. Beautiful, guys. Beautiful, guys. Let me know, what are you trading today? Are you looking to trade gold, oil, S&P, NASDAQ? What are you trading today? So right now, if I'm looking at the NASDAQ, let's mark out NQ real quick. We have this 4-hour supply area. I'm going to mark this out with 4 hours so I know what time frame I found that on. And we're going to look at these time frames. We're going to say, okay, great. Well, this area worked as resistance yesterday. Take a look at this. This was New York session opened. We rallied into supply, and then we sold off 300 points from that high to low, 300 points to the downside from that supply area. We ended up wicking back higher, closed above our VWAP, showing volume is strong to hold. We held that recent higher low as well, and then we ripped right back into that supply zone. This right here is telling me that the supply area is starting to lose strength. I do like that we were creating some lower highs on this way, but as we know, and I'm sure if you guys are recurring viewers, what we see when we have all these lower highs stacking up like this, same if we have lower lows, right? I'm sorry, higher lows, and it's just things like that. These are stop hunts, right? People who have been shorting NASDAQ overnight, they will have their stop loss. Think of it this way. Put yourself in the perspective of a seller. If you were shorting NASDAQ somewhere over here and you had a reasonable stop loss, wouldn't it be at that recent pivot high or at another recent pivot high? So if we have all these people that were short NASDAQ overnight, wouldn't it make sense for markets to want to rip their liquidity off and then possibly reverse? So that's something I could possibly be keeping an eye on today. We will also look to see how we want to react to this low on NASDAQ, 29,717. We know our market fundamentals were giving us a bit more of a bullish outlook, slightly bullish on day trading and slightly bullish on swing trading. But we have to remember those economic data, those reports, and even our headlines are very up in the air right now. We're probably going to have one of those weekends where we get headline after headline, markets get a big gap, and we get a nice move next week. So we'll see how that goes. Guys, I need you to put your hands together. We have the one, the only No Lab joining us today. No Lab, good morning, man. Happy Friday.
Good morning, bro. How's it going?
Doing good, man. How are you?
All good, man. End of the week. It's last session. You've been killing it the entire week, so this has been a test. Honestly, this week has tested my patience personally in the markets.
Yeah, no, bro, this week has been definitely funky, man. Ever since we had that mixed read on the employment data, markets don't know what's up or down.
Yeah, 100%. And personally, this has been my worst performing week this year. And you know what it's all about? It's all about honesty, transparency. So this has actually been my shittiest performing week in the markets due to a whole bunch of factors: work, other life stress, and then just forcing those trades and getting a bit breaking some rules. So, but you know what? One thing we do is we always like to look at our trading from a more objective point of view and not get too tied up into the day-to-day emotions that we feel.
Yep.
We have to keep in mind, like when I'm going through my trading, I have to keep in mind, hey, I milked these shorts from down here. So all the way from here, if I have 1 week where I lose more money than my loss threshold, it's fine, dude. It's not the end of the world. The rebound's always way larger than the downfall ever is, right? So one of the things where I made a mistake earlier this week was I've been talking about how gold reached new lows, right? And I've been walking people through the fact that, hey, if we start now getting inflation data going into the coming quarter, this quarter, that points towards inflation lowering, what that's going to end up happening is you're going to start seeing markets pricing in that reversal across risk assets and across gold as well. So you'll see gold then start to shift into that structure of bullish bias. And oftentimes this happens when markets are actually front running the move instead of waiting for that data. So Just like in 2022, where we had the Federal Reserve's most aggressive rate hike cycle, we reached a bottom before the Fed even started cutting, right? The Fed didn't cut until 2023. This was the rate hike cycle. The Fed wasn't even done hiking rates at this point, but the market had already bottomed out on gold, and as well as ES. And you also saw US equities start to push towards the upside during that time as well. And this is why it's important that we pay attention to how markets behave during these periods of time. This is the rate hike cycle. We reached the bottom 2022 October. That was months before the first rate cut even happened, right? So now that we are sitting on US equities at all-time highs, gold, we're sitting at most aggressive selling pressure lows that we've seen in the higher time frame since the 2022 rate hike cycle. Now, what I start looking at when things like this happen is I know that the markets are going to set up for the next quarter and the fourth quarter to come. And that's where those moves are really going to take place. Is just like how at the start of this quarter, you had end of March over here. End of March, you get this massive outflow in the markets. This is where you had Kevin Warsh also come in as the Federal Reserve, chairman of the Federal Reserve, and you had the war start right here. So those inflationary pressures from oil prices rising shifted the focus to a more hawkish policy, and the markets then continuing to price that in for the remainder of the second quarter. We started the move. We got those quarterly flows playing out. We reached a new lower high, and then since then we got a complete push down, fill of this range to our left, and tapping into this liquidity area to the left, which previously we had mass amounts of buying pressure come in that drove gold to these parabolic highs. So now when I start to see this, and I start to see that the price of crude oil is also decreasing and is coming down to those lower bands and higher bands of 60s and lower 70s, if oil starts continuing to come lower into those pre-war oil prices, what do you think is going to happen to headline inflation? Headline inflation will then continue to come lower than expected. And that will then happen as a trickling down effect. It's not going to happen maybe next week or the month after, but it may happen in month 3. And as soon as you get that data report, as soon as you get that inflation reading that points towards rate cut bets increasing and less likelihood of rate hikes even happening, then you're going to get that complete shift in higher time frame intraday structure, right? Until then, you can see the markets reached a new low. We pushed up, rejected here, came back down, pushed up, and now we're kind of just ping-ponging around. Gold is pretty much boxed in right now. Yes, we can push a bit lower into 3,900 where you'll definitely see a buy reaction happen there. But the point is that we want to start framing our mindset is that we're not in it's not the same one-sided sell market that we were in the entire past quarter. It's not like that anymore. It's when that shift does happen, you will understand it. But I've experienced this. I've experienced these macro shifts for the past 7 years now. And I know when things like this take place, I have this gut feeling that eventually in the next coming weeks, or maybe in a month or two, maybe I'm a bit early, but that reversal will happen. And that reversal will happen in a fashion where gold will then go parabolic again. And then people who are then selling will then start buying somewhere up here. So now, when I understand what's happening right now, personally, I want to be a bit more conservative. If I'm taking sells, maybe I'll take profits sooner, or maybe I'll take profits at, let's say, 300, 400, 500 pips instead of trying to hold for the entire range towards the downside, just because we are seeing these more aggressive buy bounces as we start digging into these lower 39.77 area on CFD for gold. And here's what I want you gold traders to keep in mind is that if we break this, if we break like 4K, then we're likely to then go down to 39.25s, 3,900. Right, 4K, as long as that holds right now, 4K and this area where gold is going to remain boxed out here. So I'm just looking at a few questions. Is there a problem logging into the site? No, there isn't. You should be able to log in. You can maybe open up a new tab or just refresh your cache in your browser settings. But yeah, everything's set on our end is working fine. So yeah, that's just what I'm looking for. Some of the mistakes I made, I was in these market open buys right here, over here. I took these buys, did not take profit. Absolute greedy. Started the week, I was up $3,000. Should have taken profit, didn't. Shoulda, woulda, coulda. Learned from it. Instead, I actually ended up moving my stop loss a bit and taking even more of a loss than I would have taken. So mistakes like this. Then I was in these shorts over here that I got completely taken out break even overnight. So while I went to sleep, price had dropped down here and I got taken out, and I had a buy limit at 4K. So we rejected 4,025. Sometimes things don't go our way, and that's fine, right? So these mistakes are going to happen in the market, but the point is that we don't let go of the past 3 months of profit in a week, right? You don't want to do that. Yeah, I personally, and this is full honesty, I personally lost 6K this week. I lost more than most people make in a month this week. I'm fine with it. Like it is what it is. There's no other thing besides just, hey, realigning yourself, focusing, understanding the mistakes, letting the market do its thing, coming back next week. That's all I can do. It'll take me a trade, maybe 2 trades to make it back. I'm fine with that. But the point being is that I don't trade best when the markets are in this indecisive phase right now. So unless I was in these shorts up here or here, I'm not really looking to take this. If this was to break towards a downside, I'm personally not looking to take something like this, because end of the week, it's going to be more of a slow session, in my opinion, just because markets are anticipating for CPI next week. That's the main meat and potatoes, right? We have core CPI, we have CPI year over year next week, which, oh, nice. This just came out, guys. I don't know if you noticed. Sorry?
Did we get our forecast?
Yeah, we just got our forecast. We just got the forecast just right now. So the bank forecast is 3.9 minimum. See, even banks are, the forecast is already less than the prior. That's what I'm talking about, is that inflation reading is going to come down. Even the maximum is 0.2 below the prior, the maximum expectation. Now I just want to check something. I just want to check these dinosaurs. I just want to check these down. Oh, would you look at that? Guess who doesn't have a fucking forecast here? Forex Factory. I bet you who else doesn't have one? Trading Economics probably doesn't have one either.
Garbage Factory.
Where is we're just haters. Oh, look at that. Even they don't have a forecast for the headline inflation reading. They just have the prior. So this tells you what we have over here is we now have the exact forecast and the numbers to play off of. Now, if inflation comes 3.9 right on forecast, which is below the maximum, which is right above the minimum, right? But it's below the prior. If it comes 3.8, that's when you'll get that absurd one-sided volatility towards upside, because markets would then price in rate cut bets. So just like how we talked about how price of oil has come down significantly since end of May, since mid-May, and that's going to get reflected in headline CPI, right? Kevin, do you have any thoughts on your side?
Dude, I covered this. You could ask them, man. I covered the same thing before you joined on CPI, but we didn't have the forecast before, so I was giving them an example. I was using the other CPIs, but that's
but this is sick, right? How we just saw it. It just got released, and you can see that market is the first one to release it. Like we're the first platform where it came out. So now, if we I want to show one thing, but before we go into this, I want to highlight something key on US equities. So one thing is that we're going into midterms, right? We're going into midterm elections later on in this in the coming half of this year, and you see price of crude oil is coming down, and the markets aren't giving a shit about these war tensions anymore. Yes, we had a little bit of inflows because of the escalation, right? But at the end of the day, price of oil has come down, right? Inflation is coming down. US equities are sitting at all-time highs. If inflation continues to come down, US equities will continue to chuck towards the upside. And guess what president will be screaming, look where look where the markets are.
Look at the
Right?
market. That's all me.
Yeah, it's at all-time highs. And then this is completely mechanically engineered. Price of oil came down. They got the price of oil down. They did their little theatrics on the global stage with the war. All that money funneled into war manufacturing, missiles. Price of oil goes up. They're escalating tensions when it's at lows. They're de-escalating when it's at highs. They know midterms are coming up. They got to get the price of oil down. They got to get US equities back rallying. And then what it's going to look like is those rate cut bets continue to get priced in. US equities continues to climb. Gold continues to climb towards 5K. And then you're going to come back to July 10th, be like, hey, shit, this was when the lab was telling us right before CPI is that we could be starting to get that shift in macro sentiment. And you don't want to get attached. And this is why it's important to pay attention to these individual data reports, because they impact the narrative and they add or take away from it. For the past 3 months, the markets are pricing in rate hike expectations because of inflationary fears. Now that the price of oil has come down and we're seeing that inflation is forecasted to continue to coming down in the next few months, this means that those rate hike bets are going to disappear, and then rate cuts are going to start appearing again. Just like how started this year, we were paying attention to those rate cut expectations. And then me and Kevin kept saying it, guys, these are fizzling out now. The war's in focus. With the war in focus, price of oil is going to go up, and that's going to put pressure on inflation. And then rate hike expectations are going to come back into focus. And they did. And now rate cut expectations are going to come back into focus. It's always a balancing game. They're always going back and forth. But it's once you understand that picture, you can clearly see it as day. It's clear across any market you want to trade. You know what the impact is going to be because of the underlying macro narrative. Like, I understand that eventually dollar is going to reach a top. Where is that top going to be? I have no idea. It could be this. We could retest it here, and then rate cuts start getting priced in. Where do you think dollar is going to start going then? Dollar is going to start coming right back down into this range. Yeah. Dollar's not going to, just because all technical traders see is this. And they're anticipating continuation. But they don't understand, if rate cuts start being priced in, what do you think is going to happen to the dollar? Dollar is going to continue its trend towards the downside because rate cuts anticipate a devaluation of the dollar. So
beautiful. Abdul asks, do you think inflation will come down even with the war continuing? I think you touched up on it a little bit before, how markets aren't really acknowledging or processing the war continuing anymore.
Yeah. And this is something we've been talking about for a while, is that the markets don't focus on an event for too long. It's there's these periods where it will hold focus and then the markets will price it in. That's the entire thing about pricing something in. This entire move was priced in of inflationary fears, creating rate hike expectation, giving strength to the dollars, more inflows in dollars and outflows from gold, right? Now, if the wars continues to happen, whatever these little missions are happening, but the price of oil doesn't get impacted and it continues to come down, then why would inflation go up, right? It's dependent on the price of oil. Like, that's why inflation went up, right? It wasn't because of underlying demand in the market. It was because of the price of oil was sitting at $100 a barrel. And that put inflationary pressures and economic stress across the globe. So if price of oil is coming down, inflation is going to come down. There's no reason for inflation to stay up. It wasn't underlying aggregate demand that was pushing inflation up, right? Like, it was purely the price of oil and increasing energy prices.
Yep.
So hopefully that made sense.
Perfect. Yes, sir. Here's a good follow-up. How long do you think it's going to take markets to start to digest, okay, war's ending? If things do stay status quo as they are, Trump doesn't pick anything back up, do you think oil is going to make its way lower? Do you think CPI is going to make its way back to that 2.8 area that we were at before the war began? It was actually 2.4 in February.
CPI?
Yeah.
Yeah, I think eventually CPI is going to make its way down, like it's going to, right? Like with rates remaining high. But it's just, what will the markets price in the coming term, right? Like that's, yes, CPI is going to come down, but the markets are also going to price in those cuts as it comes down, right? Like markets they're going to front run those cuts.
Yeah.
That's the main focus, is the front running aspect of it. Just like how in 2022, the markets front ran rate hikes before they even started, right? Like right over here, we had the first rate hike. Market started selling off from here. And then the first rate hike was in May, I think 22nd or something, or May 22nd somewhere. And then we continued. So see how that front running happens here. Markets started front running the cuts before it happened. Even on US equities, I go to daily. Market started selling off last year before Trump came out. Trump came out April, what was it? April 4th was, what did he call it?
Liberation Day?
Liberation Day.
Yep.
April 4th or April 6th, 7th, I don't know, whatever that day was, 5th, somewhere between that. But the market started selling from 21st of February because that's what pricing in is. And then a month later, when the actual move happens, you can see those immediate outflows. And then instantly, market reaches a 10% bottom. We get those headlines where Trump is saying, no, I'm not. Yeah, China has for 90-day pause on tariffs. I'm not putting 135% tariffs. I'm putting 110% tariffs, right? Walking back some of these, and then the market bottoms out and starts running those, even though that 90-day pause happens, but the market already bottomed out. Right? Same thing here. Market bottomed out because they knew that Trump was going to come out eventually, talk about a 2-week ceasefire. And in fact, he did days after the bottom, that 5% retracement. Markets bottom out because they know Trump walks back literally everything he says. And he did. And then the markets rallied. So you're telling me these aren't engineered moves? You know what I mean? These are completely engineered plays in the financial markets. You're playing against people who don't give a shit. And if you don't follow along to what's going on, man, it is 10 times harder to operate as a retail trader in the market.
Agreed. Yeah, no, if you're blind to the data and you're just trading candles, you're going to get ran over. What is your view on gold today?
So I actually want to cover the next one. Inflation going down and bond yield and bond market is high yields, which will help us sell gold. No, that's incorrect. With inflation going down, you have to put everything back into the focus of how this data report relates to monetary policy expectations. Okay? Data report in itself is only valuable when you relate it to what the markets are pricing in for policy expectation. That's why every single job report that comes out, when you see NFP come out at 172,000, just because that is such a great jobs number doesn't mean that the US equity market's going to shoot up. What actually means is you're going to see outflows because markets are going to price in higher rates for longer since the labor market is doing good. And that creates outflows from US equities, from S&P, from NASDAQ, from gold, because dollar is seeing strength, dollar is seeing inflows. So if inflation is going down, you're not going to see gold going down, because gold was going down because inflation was going up. So why would gold go down if inflation is going down? Gold's going to go up if inflation goes down. And I know for some people, this is going to seem backwards because you're taught that gold is a hedge against inflation. But this is the markets since the dawn of time have been influenced by macro. Gold is a hedge against inflation because gold since the dawn of time has increased in value. It's a safe haven. It's an asset that holds its value over a test of time. Since the dawn of time, people have been holding their money with gold. So when inflation starts going down, markets are going to price in a higher gold. Gold is going to see that reversal. Gold is going, because that's going to mean rate cut bets are back on the table. Every time you see rate cut bets in focus, guess what happens? Gold goes absolutely parabolic. You want to back test this? Let's back test this really quickly. I'm going to load up gold from 2024. Oh, that's a completely incorrect date, right? That is here, let's reload this.
Still so cool, man. The backtest fundamental tool. You guys got to take advantage of that yourself, man.
Man, guys, we're reworking this right now, and I'm on Bitcoin, unfortunately. And what we have planned for the next one, it's insane. Like what I built it myself, first of all. So what I built it's absolutely insane. Anyways, before we go to that, let's go right over here. Okay, this one candle. Look what happens here. Fed Chair Powell signals possible September rate cut, boosting gold demand. Fed policy pivot towards easing increases gold's appeal as a non-yielding asset. Gold rally, part of broader trend fueled by central bank buying and inflation concern. So now look at this. Gold surged sharply after Powell's comments increased expectations for imminent Fed rate cuts. This triggered buy-side momentum and investors sought protection from economic slowdown and rising downside risk, driving gold to new highs. Look where gold went over the course of a month and a half, from $3,300 an ounce to $4,400 an ounce. That's a 33% increase in gold prices in just under 2 months because of one event that took place. So when inflation comes down and rate cut expectations get priced in, what do you think is going to happen to gold after gold has just reached such aggressive lows, the most aggressive lows since 2022? Do you think gold's going to continue going down to 3K, or do you think gold's now going to head towards the massive range that it's created towards the upside following the macro sentiment and shift that we're talking exactly about? I don't know when it'll happen. All I know is that this will happen. And when it does happen, I want every single one of you to PayPal me $100, because that's the least you can do after we've guided you in the market. So, no, I'm just kidding.
He's not kidding. He already put his PayPal in the description, guys.
I can't even just blast it out to the chat. But I hope this is making sense. Like, I hope you guys are understanding at what a pivotal point we're approaching, that this quarter is very important for how the markets play out in Q4, right?
Absolutely.
When I understand this and I start seeing that shift, guess what I'm going to start doing? I'm going to be more vigilant with the shorts, the selling, the shorting. And guess what I'm going to do with the buying is that every single pullback I'll buy, just like how I sold every single pullback here. And then eventually 6 months down the line, gold will be right back at 4,700, 4,800, going into 5K, and that will be all before we even get rate cuts. And then you're going to be like, damn, Nalab, how'd you even know this? It's because I've done this, man. I've seen this play out day in, day out. Is that when Powell came out here, I knew what Powell said was going to take gold out of this range that we were ranging in for months. Gold pushed up after consolidating for months. One event happened, gold rallied. Gold has pushed down from highs at $5,600 an ounce. Guess what's going to happen? It's going to rally when those rate cut expectations come back into focus. And same with US equities. US equities will continue to reach new highs. NASDAQ will reach new highs. ES will reach new highs, all before we get the next series of rate cuts. Whether that happens at this Jackson Hole Symposium. Oh, here's another prediction, all right? The Jackson Hole Symposium always comes out. They always do something big. We used to call this in 2022 the Jerome Powell freestyle, where Jerome Powell would come out and speak for 7 minutes maximum, first of all, and he would cause havoc in the financial markets. You can go to 2022 August, 2023 August, 2024, 2025, there's always been a big pivot or a big sentiment increase during the Jackson Hole Symposium. So I really think is that the same type of rally is going to happen at this Jackson Hole Symposium, is that the data is going to come down. If inflation starts coming down for June in next week, and then the July's reading also comes down in August, Jackson Hole Symposium is at end of August. So guess what? Maybe that's the time we get that pivot. And if we get that pivot, then gold's going to rally towards the upside. ES is just perfectly in time for midterms, going to be rallying all-time highs. And guess what? That I think is going to be a very high probability theory that could play out. And this is where I like to think about all possible scenarios that can play out, right? Yes, price of gold can go towards a downside. Maybe next week, inflation misses the mark, doesn't come out at 3.9. Instead, it comes out at 4.1. Maybe, let's say that. Then you know, oh shit, it's above the maximum. That dollar is going to see inflows because markets are going to price in a tighter policy. Then maybe gold will go down, right? But I also understand the opposite end is that if we start seeing if we start seeing inflation come down, then you're going to continue to see that gold upside get printed in the intraday time frame. And that's going to lead to that overarching higher time frame reversal that we'll see happen over here. So any more questions regarding this? I think we just did a big masterclass in how to anticipate change in structure and also fundamentals, all the way from certain events that can cause it and what data reports we look at and how to digest it and how to always relate it back to monetary policy expectations.
Beautiful, bro. Well done, man. Guys, round of applause to Nalab. Absolutely killer, bro. Happy to have you back here, man. You know why you had a bad week this week, bro? You were only on market in the morning once.
Yeah, yeah, exactly. These correlations aren't random. You know? They're not random. But speaking of bad weeks, one of the reasons why it doesn't mentally affect me anymore is because of that maturity in the markets too. Yes.
Trump headline.
Oh, a new Trump headline?
Yeah, nothing's going to impact us right now. It's just Trump saying, I will not sign housing bill, which has been fully approved by Congress. Just him stomping in the corner.
Yeah.
I don't want to do that.
Yeah. Yeah, nothing more. So guys, actually we're coming out with our official launch for the Market Trading View integration extension that we built. It's going to have more stuff added to it. Our official launch is July 15th. So Jeev and I, my co-founder and I, will be doing a stream, and we'll be doing a stream for the launch, and it's going to be great. Come to it. We'll teach a whole bunch of stuff. Jeev is one of the best traders I know. He taught me everything I know about the financial markets. One of my best friends, my business partner, like my brother. So we're going to come together, do a live stream, go over markets, go over the new extension and the updates to it. And yeah, there's just so much that we have coming. The recent feedback that we got from our users has been incredibly helpful over the past 3-4 weeks. And the platform that's coming is completely different from what you see right now. From what you see right now and what you'll see a month, 6 weeks, 8 weeks down the line, because it'll come in iteration, it's completely going to change how you interact with market. It's completely going to make, you'll always be interacting with market is what's going to happen.
That's cool.
Yeah, it's very, very exciting stuff. And I'm just very happy that I get to share it with the world.
Can we somehow place a correlation button / label on market showing a basic / small correlation infograph between rate cuts, hikes versus inflation versus gold versus USD?
Yeah. Can we place a small correlation on market? Where would you like that? Like what related to what? Like on a headline or where? Like in the buys?
Like glossary.
Yeah, if it makes sense, we could figure something out. We just have a ton of stuff happening. Like it is, you guys will see it. I don't want to say too much right now, but what we have coming out, it's going to blow your minds. Like everybody else who has tried to copy us will be a year or two behind us after this update, and they can try as hard as they want. You just when you can't be the best, there's no point in even trying. And
there you go.
When you don't have excuse me, when you don't have aspirations to be the best, don't even try. Right? That's why people who used to play with Kobe Bryant used to be scared shitless of Kobe, because Kobe was up at 4 a.m. at the gym, coming home for breakfast, going back to the gym, grinding, playing a game, eating, going back to the gym at night. Bro, that's me. I'm at my desk leading a company 20 hours a day. Try to outwork every single one of us. It's hard. It's a hard thing to do. You know, I would hate to be somebody competing with market, because it's like, shit, man. I would hate to be number 2, and trying to fight for number 2 is just like something I would never want to do.
Nah.
Yeah.
Well,
anyways, ES. I want to go over ES. So when was this? On Monday, we talked about this. I don't know if I have and some of these arrows. Okay. I have so many drawings. I know some of you probably think that this is just messy. Anyways, we talked about not taking buys up here, Remember that on Monday we mentioned, I was talking to you guys. I was like, guys, I'd rather wait for a pullback to down here to this support area that we had. Sorry, this was not like this, somewhere here, because you're going to see a liquidity move like this, a pullback for buyers to jump back in, because this to me is not an attractive buy price. Like, do you think the auction is going to take this as a buy price and then continue to rally after we've just pushed up from down here? No, it's like you're going to get that retracement, and at times it's just wait, set a limit even, right? Like set a limit here, maybe have a wider stop loss, and then you target towards the upside. And it played out, but played out 2 days later. So the buy never happened here. The buy actually took place here. The entire move for the week was this one. So on ES, it's the same principle going into it now. But the thing is, right now, ES has a higher likelihood of pushing up because we got that buy side liquidity from here. And now, instead of it first time reacting here to the same price point on left, having a less likelihood of breaking it, that's when you have sellers jump in to drive price to more attractive buy prices. And then you have buyers jump back in. You have that double bottom play out. Buyers come in, start holding support over here. Yesterday's open, and we continue to push up. So that's just easy price anatomy, right? When most people see a red candle like this that we have over here, when most people see this sort of candle, they get scared. Me, I get excited. I'm like, oh, there's my entry's about to happen. And then you get that entry, you get that double bottom play out. You see the sign, initial sign of buying, buyers jump back in, and boom, there's that intraday play. So even on plays like this, look, this is what I mean about expanding your time horizon. If you're going with the intention of I'm going to enter when price reaches this low, and my expectation is I'm going to target the highs, right? I'm going to target, and that's a 115-point move towards the upside. What I'm not going to do is, just because price starts coming right back to my entry, is start panicking that we're going to start selling off. Just because I see these wicks over here doesn't mean that sellers are just going to drive price lower and lower. Like, this is why you must keep in mind that price is the most important thing. I don't care how a candle looks, in my opinion. A candle could be looking super bearish, like just how this one is. How many people do you think got lost in here and started selling this? I bet you so many people did, because this looks like, oh shit, this is such a heavy sell-driven candle. It's definitely going to break through here. And that's where you get caught up in, oh shit, this is what I think is going to happen and not what can happen and what's going to happen. It's the same thing that I did, is that I was in these buys that I should have just been scalping. And I'm like, no, you know what? It's going to go up to 42.20. And guess what it didn't do? It didn't go up to 42.20, even though I saw it rejecting. And I'm like, you know what? Let's leave it. So it's the same thing, that I don't want those expectations that it can just play out within a small period. Expand that time horizon. As long as market is respecting the price point that you have in mind, and you're not coming to your stop loss, just let it play out. Just let it play out. There's no rush in getting profit. Like, your stop loss is always going to hit quicker than your take profit ever will. A take profit, I've always noticed that my stop loss will be gone like this, but my profit target will hit in a day and a half, and it'll be just waiting for it. That slow and steady wait where that orders fizzle out, the sell side orders fizzle out, and then you get that clean move towards the upside 2 days later. So yeah, just expanding that time horizon. If that's a focus for intraday trading that you have, one great test will be this coming quarter and this coming year, when we do see this shift. And what I'm going to personally do is start loading up and holding every single one of these buys that I took. One thing I didn't do here is hold all these sells that we took, Kevin. And I think that's one thing that I definitely am not going to do this time, is that I'm definitely going to hold those runners. But imagine if we had every single intraday sell runner going. We would have been in so much profit from all these positions that we called out on market in the morning, right? So next week's data is the main meat and potatoes for the week. And that's why gold remains in this box, essentially, where we could easily get placed towards the downside. Inflation data sets us up, and then we start getting that shift towards the upside, or depending on that report. So When it's not this report in focus, then it's another labor market data report in focus. There's always something happening that's either taking away from the bias or adding to it, and that's why we have like what supports it and what could flip it, right?
Yep, perfect. Perfect. We had a question in here. It says, Mr. Nalab, my question is, when we have the final report of inflation, does this Donald Trump fake war will affect the market, especially gold?
Man,
it's what Trump says versus what's really going on. There's a big disconnect.
So Trump, there's no like final report of inflation like that.
Right. There's always going to be the next.
There's a CPI every month. There's always an inflation report. It's just what you have to think about in context of what just happened. Inflation went up and now it's coming down. So gold's not going to continue going down. If inflation's going down, the opposite's going to happen. Like, gold is bullish since the dawn of time. Gold very rarely has done massive pullbacks like these that have not been followed by monstrous rallies back to highs. So I would be surprised if gold, because inflation goes down, starts coming lower. Like, that to me would be breaking market dynamics and market like fundamental dynamics as well, right? So of course, inflation report going down is going to push gold up. It's just how markets work. It's just how monetary expectation and policy works.
Awesome. Awesome. Guys, drop some W's. Let us know, what are you trading today? Have you had a green week, red week? It is Friday. Let's end it strong. See if markets give us something. Gold is breaking below that level right now we were looking at earlier. I was looking at the 30-minute time frame for some continuation. We are getting just that, even if it's just a small move right now towards 40.75 would be great.
Yeah.
Short term, right?
Short term. Yeah.
Yeah. Now
let's be a bit careful approaching these lows here.
Yep.
Just want to see how it would react there. But Kevin, I'll be right back, man. Just give me like 5 minutes. Yeah.
Get out of here. All right, ladies and gents, let us know. Let me know in the comments. What are you trading? Did you take any trades so far today? It's a nice move here on gold. We were looking for the 30-minute close. Remember this last candle we had right here? This guy closed bearish, rejection candle right here. We talk about pain in the market. Here is our pain scale. All the people buying these highs getting swept to the downside now. They are in a red position, a bleeding position. So we'll see how it plays out from here. Was in gold sells from Asia, 41.20. Nice. You said was, so I'm assuming you got out by now. If I am looking for a re-entry here at this point, we'll probably be looking for some type of pullback area. Again, if we can close somewhere below this zone, say we close somewhere over here, look for a pullback. This 40.90 zone, this purple area we have mapped out, this has been our key level all week. This started back Wednesday of last week, Wednesday the 8th. Oh no, Wednesday, that's this week, around the 5-minute. The 8th, we used it as, look at this, with support on Tuesday. Support on Tuesday. Resistance on Wednesday. Resistance on Wednesday. Thursday, we used it as support. This morning, we used it as support temporarily. We are now breaking back below. This is our key area that we're looking for price to return and give us a move. Getting big volume coming in here, bringing us back to the downside as well. I'm definitely with Nalab on the fact that we're most likely going to get some type of turnaround at some point in our equities on gold in gold as well. But right now, really just looking for short term. We got to remember we're day traders. So we're looking for these intraday moves, trading off of our price levels with the fundamentals and with the headlines that we receive too. Everything comes together. Trading is not just one piece and you're good to go. Trading is like building a puzzle, putting all the pieces together. Risk management, execution levels, key levels, understanding fundamentals. Everything. What strategy are you using? Are you making sure you use it every single day? Here's a quick pullback and retest. NQ short, Mel's in some NQ shorts. I'll have to see it. 29,935. Guys, big shout out to Mel. Mel, if you want to drop your Instagram in here, I'm always happy to let people do a little, I forget the term, but promote yourself a little bit. Markets are open. New York session is open here. I'd be a little careful. I'm looking for possible shorts on NASDAQ off 29,896 over here. I do want to see a bit more of a bull move off the open. We do have those low-hanging fruits, like we call them, right? Where we have stop loss hunt right here, 29,950, stop loss right here, 29,963, stop loss right here, 29,974, and then bang. What else do we have? We have our previous day high right above that. So we have a lot going on. Yeah, no, a lot going on. I got you, Mel, of course. Absolutely. Guys, Mel is one of our affiliates here with the market team. She is phenomenal. Great trader, great breakdown. Caught a crazy trade, I think, today. Saw you post, was it an 8-to-1, or I saw an even bigger one than that? Love to see it, guys. We're all about people succeeding in the market. That's why we create such a great platform and constantly update it to make it just that much better for you guys. Gold on a major pullback, 1 to 15. 15 to 1 risk to reward, guys. I would be calling it a day. If I caught that on a Monday, I'd see you guys that following Monday. S&P breaking its previous day high and those pivots higher. NASDAQ also trying to hold up here. Be a little careful. Heading near the open price. Guys, what have we been noticing on NASDAQ lately? If you've been joining me here every day this week, you'll know that I've mentioned something pretty often. That is NASDAQ reacting to that open price level. It reacted to it yesterday, where we had our open price level down over. Actually, no, it didn't react to it yesterday. Yesterday was the first day last week where it didn't. But previous day, this was our open price. Our open price on NASDAQ was right here. And look at how markets opened. New York session opened. We pushed up to the open. And look at how many wicks we had moving into that. We failed to close above it multiple times, which led to a 300-point sell-off. Now at this point, where is our open price on NASDAQ? We have it marked out right up over here. It's in that supply. This is that key area. Yeah, Piyushi up 15 to 1. Crazy move right there. We're gonna have to bring Mel on for a little intro video as a guest herself. That'd be pretty cool. What's up, Usman? Good morning, brother. How are you? Happy Friday, guys. I hope you're excited for today. Let's take a look at what oil is doing. We mentioned before, oil is a very important asset to keep an eye on, especially trying to determine general direction for the S&P and NASDAQ, because lower oil prices, lower energy prices equals higher tech prices. Well, higher tech stock prices, not prices and costs on us, the consumers. NASDAQ back up there. Let's see. Pushing up. Let's see. Be patient. Now, guys, don't forget, when markets open, there's no, like New York session opens, there's no reason to jump the gun, jump right into that market. Say, oh, I need to take a trade right now. Some people trade a strategy 15-minute opening range breakout. I have to wait for the 15 minutes to open and close. That's 15 minutes into the New York session. Then I have to wait for us to break out of one of the directions. And then I have to come up with the trade setup. Do I want to take this as a breakout trade? Do I want to take this as a reversal back lower? So do your pre-market analysis, have your prepared zone so you're not forcing trades in between, and take it from there. But nobody's got a gun to your head saying you have to trade right now off the open. So just be patient, let markets play out, and get to some type of key level. Yeah, for sure, guys. 100%. Guys, let me know, what are your favorite assets to trade? Myself, I trade the NASDAQ, S&P, and gold. Find it's very important to give yourself just a small handful of different equities to trade, because what we then get is we're going to get different opportunities in the market. Yesterday was a great example. Yesterday, gold's price action, by the way, look at that reaction to that pullback off that purple zone, 4104. Rejecting again. Yeah, Mel the sniper. So here we go. Gold yesterday. Look at the price action on gold yesterday. We had awful price action. This was a whole lot of nothing. We went nowhere anytime soon. If you bought, you got stopped out. If you sold, you got stopped out. Whereas the S&P and NASDAQ yesterday gave us beautiful price action, an amazing short opportunity, an amazing long opportunity. It gave us a much easier range to trade versus gold. Sometimes we get the reverse of that. Yeah, Mel, we got to make it happen. Hit me up, we'll make it happen. I like to work the schedule over here. Nick, you don't know how to message me, bro. It's already scheduled. She's coming on next Monday. No, I'm kidding. Mel, you let me know. We'll make it work. Always available. In case you guys didn't know, we're doing these market in the morning streams every single day, 8:20 to 10:30. The reason we come in at 8:20 every day is so if we have any economic data or any big headlines that come out, really for the economic data that comes out at 8:30, we're 10 minutes ahead. We're ready and we're prepared and we're covering it as it comes out. Midnight. Oh man, midnight for you, Mel. Where are you located? Where are you from, guys? Let me know where you're from. I love doing that too. I love seeing where you guys are from. Yesterday was so dope. You guys posted all over the world. It's great that we're able to connect such a strong audience around the world, and we're all doing the same thing. We're all trading. We're all looking at the financial markets. We're all discussing things like monetary policy, how these inflation and unemployment data reports are impacting markets, levels and areas to buy. Australia, we got some. That's tough, man. I don't know if I could do that. The heat and the large bugs? No, thank you. UK, cool, man. Cool. Take a look at gold. Really finding selling pressure in this area over here on gold. Texas, oh man, Texas, you're trying to keep up with Australia with the heat. That's great, guys. That's great. New Zealand, 1:30 in the morning. Wow, talk about dedication. That is amazing. Big W's to Marie over there. That is, wow, 1:30 in the morning. Even Mel, midnight. Texas, I know Texas ain't a country. I just meant with the, listen, you know what? I'm from New York. Texas and New York are very different. Very, very different. NASDAQ, look at that, coming up near that open price, and we're starting to struggle already. Very key level to keep in mind. And again, this is something that I religiously come to every day. I religiously mark out every single day. Previous day high, previous day low, and open price. Bro, what's different? Oh, dude, where do we even start? Other than the housing prices, the heat, I'm sure animal-wise, you guys got different types of animals down there. Yeah, I'm in New York, man. This is not city boy, but definitely different than desert areas. Lot more desert, a lot more heat. Obviously, Texas isn't all desert, but it's a lot hotter over there. Housing prices are a lot lower. Different environment. It really is. If you guys haven't been to the States or haven't been to multiple states, it's really crazy the different types of economies even going on in different states, even in different counties and general areas. Like I know people an hour away, also in the same area. I'm in Long Island, New York, an hour away who are in a crappier position. And I know people going an hour the other way that are in a much better position. So it's wild. The range is off the charts. There we go. We got Connecticut. So Connecticut, you get it. Each state, man, it's going to show something different. It's going to have something for everybody. Look at that NASDAQ, beautiful reaction off that open price. Now, guys, this is not the open price of New York session. This is the futures market open price. The reason we mark that out is because we're trading the futures session, right? We're trading futures contracts. We want to know the price action going on. And this gives us the idea if price is below the open price, we're looking at a currently red day in the market. So we want to stay on that side of the trend. And vice versa. If we sold off, we found support, we could target that opening price, looking for us to break it and push green on the day. But wow, what a reaction. We had that 4-hour supply that price has reacted to before. Even yesterday we reacted to it. We're reacting to it again. We have 5 minutes left for the 15 minutes to close. 11 seconds left for this 5 minutes to close. Yeah, Usman, you get it. Mob guys all over New York. I go to the city and I see people snapping their fingers walking in crowds. Where we say, I'm walking here. But no, it's great stuff. Great stuff, ladies and gents. The lab will be joining us back soon. Great. Look at this sell-off coming out of NASDAQ here. And you guys already know we're a big fan of keeping an eye on the VIX. What is our volatility index doing right here? VIX was trying to move lower, but look at where the VIX is currently trading. VIX right now is right over here. Look at each time VIX came into this level. We pushed higher. We pushed higher. Now we're getting ready to push higher. When VIX is pushing higher, we look for that divergence, right? So if VIX is moving higher, we're looking for the S&P and NASDAQ to move lower. And that's exactly what we're getting there, guys. Why don't you trade NQ? I do trade Nasdaq. I usually trade the micros on NQ, especially given the volatility and the range we're seeing now. I did not catch this one. I will be honest with you guys. When I'm live streaming and I'm doing the stream with you, it's definitely a different atmosphere to trade than if I'm just trading on my own. I'm using all my tools I like to use. This is more of a presentation, a breakdown, and some knowledge for you guys. I do personally trade another hour after we end the market in the morning stream, use some other tools as well. Yeah, cool, Maria. That's dope. That's very cool. Awesome. Awesome. Nasdaq, great selling pressure, trying to close. Now at this point, if I wasn't in shorts, which I'm not in shorts, and I was looking for a position, I would be looking to see where Nasdaq wants to close on this 5-minute chart. So we want to close somewhere below VWAP. So we want to even start sweeping these recent lows as well. And we will see, right? This is sort of an opportunity where we say we got to wait and see. If we take these lows out, do we want to then come to the next area of interest, which would then again result in another 60-point move on the NASDAQ. Now let's see. Beautiful. Guys, let's see. Let's see what gold's doing. Is gold holding that area? No, gold was able to break back above. Look at that, man. NOLAB had it spot on, guys. Choppy price action, end of the week. We had choppy price action all day yesterday, too. So why are we expecting a different type of move today? We should not be. Wow, huge, huge. Look at that. Look at that reversal off of those lows. Swept those lows in reverse. That's what we were looking for NASDAQ to do to the upside. It did not form that just yet. Very good. Very good. Very good. Guys, NOLAB, unfortunately, had to take a dip on out, but got to thank NOLAB for being great. Write W NOLAB in the comments for him. I'll screenshot that and send that over so he sees all the love he gets constantly, man. We run a great duo over here. Run a great show with Market in the morning. Always happy to bring guests on with me. Great breakdowns and great fundamental analysis as well. The Dow chopping around. Take a look at the dollar. Dollar is also very range bound. Now, the dollar was coming off of a key level. Look at this big red zone I have here. I'm actually going to change this color. And we're going to we'll make it like yellow or something. Yellow and orange. Look at this area. Again, multiple rejection points. We're above it. Now we're getting multiple holds here as well. Great area to see if we can possibly move higher off this $100 area. If we move higher on the dollar, we know that can have a bit more of a bearish impact on gold. So it is just something to keep an eye on. But if we are able to break back lower here on the dollar, that does put us in a much better position to go long on gold. Hey, Ironclad, I appreciate you, brother. Man, Ironclad has been somebody that I've been trading with, teaching with, trading with, streaming with, whatever you want to call it, for years now. Great guy. Great. This is such a great industry. I love how involved the trading industry has become. I was talking to a few people yesterday about the evolution of the trading industry. And guys, let me know if you agree how even just a few years ago, it was a very male-dominant industry, like 95% male. At this point, it's really made that big shift. And I'm sure you guys have seen it too on social media. But it's really moved to more like an 80% male, right? There's a lot more female traders. It is fantastic. The opportunities the market presents doesn't care what gender you are, man. You'd be whatever you want. Markets are giving us opportunities and good framework. Yet market's original framework was created by top Gs, but its true power comes from the collective wisdom of our community. More power to Market AI. I love that, bro. That is beautiful. Beautiful. Well said. Yeah, there we go. What's up, Safe? I joined late. What was in the lab and your view on XAU USD? Good question. So I was looking for a break below and a retest of this 4090 area, this purple zone we have been using for this whole entire week, really. But we have to remember and we have to be able to recognize the type of price action in market structure we're seeing. And what we're seeing, even just yesterday, is we're seeing range on something like gold. We are not getting continuation. We're staying range bound. If you buy, you get stopped out. If you sell, you get stopped out. Very improper price action. And that's exactly what it looks like gold is trying to do again today over here. So leaving gold alone, we know the fundamental bias is starting to shift bullish, and the lab's idea on gold was also a stronger shift to the buy side on gold. I also mentioned earlier too, gold being down 30% from its all-time highs is a great place for it to start to turn around. This is a much better buying opportunity from an institutional standpoint than buying at 5,000. Imagine, do we really think when gold was rallying? Look at this insane rally right here. I'm going to show you guys this chart right here. This chart is all-time highs. 2,400, 2,700, 3,500, 4,300. We were just pumping higher. We saw the volume was exploding over here until we finally got that major outflow. But again, here comes the question. Institutions were buying gold up the whole time here. They were buying it. They liked it at 2,300, 2,800, 3,000, 32, 34. They did not like it that much when we were starting to break 4,600, 4,800, 5,000. Institutions don't want to be buying all-time highs. They want to be buying the dip. This is where institutions are most likely starting to load up. We see volume is a little scattered at this moment. It did start to pick up over here, which could have been a bit of an indicator. It is slowly slowing down, but what I would like to see to get us going again to the upside would be volume to start to pick up, just like we saw every time we started breaking new all-time highs again. Something to keep in mind, volume and price go hand in hand. Price is the reaction to volume. Remember that. Piyush, no. Piyush, I'm going to put you in timeout for that. ES continuing higher. So ES has a bit of divergence against the NASDAQ right now. So if we take a look at the VIX, VIX is trying to move lower. This purple zone we had mapped out up here was that area that we were using for the past few weeks now on the VIX. The area that it's at right at this moment, we do see this is a bit of an extreme. However, if the VIX can continue and make new low of day, while ES makes new high of day, that confirms our trend to the upside on the S&P. NAS pushing again. Beautiful. Beautiful. Look at that. That's similar setup that what we saw yesterday, where we had a sell-off, and then we wicked right back and we closed above VWAP over here. So we're supporting price above VWAP is usually a bullish indication. Now, for myself, my own strategy, my own system, my own edge, I cannot look for a long position going into an area of supply, going into an area that I've seen historically sellers be able to step in and knock price back lower. Because guess what? If I take a long position up here, I'm buying the highs. Not only that, if I take a long position up here and I'm buying the highs and then it reverses on me, I'm going to feel like such a dummy. I'm going to be like, why would I do that? Why would I chase longs at highs in a supply area when I know that price has recently been rejecting the zone? Now, does that mean buyers can't take control and can't bring us higher? Of course not. I was also looking for these levels to be swept too, and that's exactly what we're trying to go for. But at this point, in my opinion, it's either a look for a sell opportunity or a leave it alone, a do not trade zone. I also see that, guess what? Yeah, we reject this area and move lower, but also when we can close inside this zone, it leads to more of a range. So again, create trade scenarios, create a trade plan. If we can sweep all of these highs, if we sweep that previous day high, I am looking for a retrace. I'm looking for us to, yes, take those longs on a break and retest of the supply zone using this old resistance as new support. So very good there. All part of the pre-market plan, all part of our prep. That's what it's about. So we just swept that first high. I would think we're going to make our way to that next high as well. Very strong buying up here too. Don't forget, guys, let's take a look at our equities. I'll pull up our equity chart right here. It's important to keep an eye on equities when we're trading assets like the S&P and NASDAQ because they have a very strong pull. So if we see that, look at this, NVIDIA. We opened on NVIDIA at $202. It is now at $206. That is a 2% move on NVIDIA to the upside. That is helping support this bull move on NASDAQ. But then take a look at these other assets. We have Apple trying to struggle and move lower. SpaceX still below that 150. Guys, SpaceX is heading to 100. Buy those puts, full port, put the house on it. I'm just kidding, of course, not financial advice. I do think SpaceX has a long way to go to the downside. I would like to see that, to not short it, but find a better buying opportunity for a long-term position. Google trying to move lower as well. We are within its previous day's range. That too, guys. Take a look. Are our equities within a previous day's range, or are they breaking and trying to trend? Microsoft is above its previous day's range. So as much as it's selling off right now, it did gap up and try to move higher, and it is still above that previous day's range. So if we looked at our watch list, it would tell us Microsoft is still up 3.3% today. So gold buys from liquidity sweep. Nice. Good job, bro. Good job. Good work. Same with Meta, gapped up. So we have a lot of gap ups in our equities. Again, that's more bullish. So again, I'm going to be much more patient before just jumping in random shorts. Just like when we get economic data, that's a bit of a mixed bag. I'm looking at my indicators, which are not actual indicators. They're just different markets and how I'm reading them. And it's giving me a mixed bag. Most of them are leading bullish. Look at that. NASDAQ trying to continue here. I do believe this is going to try to hold. There we go. New high a day on NASDAQ. Bang. Another one. Heading right for these highs. We're going to 929. There it is. 2969. Then we're going to 2975. Then most likely going to head to that 30,000 key psychological level as well. Again, I'm not looking to be a buyer up here myself. I do not want to buy high. I would rather buy on a dip, but it's up to you guys. Whatever strategy you trade, you want to come into the market every single day and respect your strategy every day. You do not want a strategy hop. You don't want to use VWAP regular band today, and then out of nowhere be like, well, now I'll use the standard deviation band multiplier one. Like, we do not want to be jumping around. Does that mean VWAP's not a good strategy? No, it means that whatever your system is, you have to honor, you have to follow. Doctors have to follow the same system. Lawyers follow the system that works for them, and of course the actual system that they have to follow with laws. But every big job, everything that requires and makes you a lot of money, even smaller jobs too. You have a job, you have a plan, you're given structure, you follow it, and that's how you succeed at that job. Well, that's how you're going to succeed at trading too. You're going to follow that plan, you're going to stick to it, and that's it. That is absolutely it. So again, I'm not going long up here because I know we're sweeping highs and we could very easily pull back, but I'm also not going short up here because I know the bullish momentum we have. I do believe we just had a headline right there. We could see if that was anything of significance. Let's see. Oil heads for weekly gains as Middle East supply risks persist. So guys, if a headline comes out and you're not too sure about how does this actually impact markets, what does this mean for me or my markets? You hit the brain icon. It's going to give you a market AI analysis and tell you exactly what and exactly how. Okay, take just a moment to summarize. There it is. Risk off tilt at the margin as persistent Middle East supply risks keep oil grinding higher and reignite inflation concerns. Higher crude tightens global financial conditions via repricing of rate cut expectations, like Nolab mentioned earlier, squeezing real incomes and pressuring energy-intensive sectors. Like I mentioned, guys, higher energy, lower equities. What else? Watch break-even inflation, front-end yields, and energy equities for confirmation that this oil move is feeding back into broader macro and policy expectations. That's great, guys. That is amazing. Amazing, amazing. Let's see. Let's keep an eye. So look at that. Swept these highs, trying to pull back again. One of the reasons I'm not just chasing longs, and I definitely recommend you guys don't chase longs up here either. ES most likely has some more strength. We wicked out of this zone, trying to find support. We did break previous day high on the S&P. Yo, what's up, country girl? There's nothing sweeter than going through the learning process, learning from a great mentor, developing your own plan, and having confidence to execute it each day. Spot on, spot on. A lot of people, when they get started, if they don't have that good mentor, they don't have a strong community with them, They're forcing trades. They jump into the market and they're just like, oh, we're moving higher. I got to buy it now. They get stopped out. Oh, I got stopped out. I should reverse my trade because I was wrong. And then they get stopped out again. And it's like they have nothing. They have no foundation. When it comes to trading, you need good foundation. When it comes to anything in life, psychology-wise, you need good foundation, period. If 90 to 95% of retail traders are losing money, you have to do what those 90 to 95% aren't doing. That is journaling. That is putting together a system. That is having follow through. That is having a routine you follow every single day. Can't stress that enough, man. Routine, routine, routine. Let's take a look. What's gold doing? Is it still giving us a whole lot of nothing? Let's see. Yeah, gold's giving us nothing. Again, similar price action to what we had yesterday, where we had range-bound price action. It was not giving us much. So why would we expect, if we didn't have a trend yesterday, why are we expecting a trend today? All the same. You guys are crazy, man. Gold is the ultimate edging asset. Yeah, pretty on days like today, it absolutely is. When it lacks the follow through, can't find that, then yes, it absolutely is. NASDAQ still struggling, trying to hold higher. Again, one of the main reasons I'm not just jumping in a random short here. Now, on the other hand, if we are able to fully reverse from this zone, close somewhere lower, we could look for a pullback, a lower high, see where VIX is trading, see where the rest of our equities are trading, and take a possible short position on NASDAQ here to target these lows, right? So we have these swing highs that we just started to take out. We reversed from swing highs, we had to swing lows. Now, my issue with that is we did not take out this final high way up here. So I do think we still have a little more ways to go on the S&P and NASDAQ to the upside. Take a look at our equities one more time. Microsoft still with some weakness, but NVIDIA, new high of day on NVIDIA. Apple, pumping. SpaceX, I'm going to replace SpaceX with Amazon, as SpaceX hasn't been having that big of an impact on equities, right? Amazon has been a leading, one of the top 5 holdings of the S&P and NASDAQ. That's one we want to give a little more interest and focus to. And look at that. Amazon trading just like Microsoft is right now. Apple trying to hold, really going to look at that. Google trying to hold, Meta pushing higher. So now we're getting a stronger batch. We're getting 1, 2, 3, 4. 4 out of our 6 equities all showing some strength. Again, this gives me confirmation on those buyers to try to hold us higher, not jumping in any shorts right now. Yeah, I'm with Maria, guys. Be nice. We're nice here. This is a nice community, a supportive community. That's what it's about. We got to show love and respect and support to everybody. Everybody deserves a nice chance. Everybody deserves to be treated equally and nicely. We are an a diverse, a happy, and strong community here. Guys, Market in the Morning. We're about happiness, peace, love, and joy, and of course, education, learning, and getting better every day. Our goal as traders is to earn and learn, get better 1% every day. Learn from your losses, learn from your winners. Every trade you take, you have to write down prematurely, right? You have to write down before you take that trade. You have to know those 3 things. We went over it the past few days. What 3 things do we have to know? We have to know where you're entering, where you enter. You have to know where your analysis is wrong. That's your stop loss. And you have to know where your take profit is, which will usually be at the top of a range if you're going long at the bottom, or at the bottom of the range if you're going short at the top. So you have to know those 3 things to actually have some strong conviction and be able to repeat what you're doing in the market every day, right? The whole goal of trading is to not get rich quick, right? As much as trading is a great opportunity to, yes, make a lot of money, it's only an opportunity to make a lot of money if you have a strong foundation and a really good focus and system. You cannot be trading randomly. You can't just think, okay, today's the day that I make $10,000 in the market. No, you have to go into every day knowing, okay, my risk per trade is still the same. My risk per trade is $100 a trade, $200 a trade. My risk reward per trade, I'm always going to shoot for a 3-to-1 per trade, a 4-to-1 per trade. This gives you the opportunity. Okay, I do like how we're reacting off this open price now. I will say that this looks pretty solid on some shorts on NASDAQ. Again, take it at your own risk. That's it. Do your own analysis. Don't say Kevin told me to take it and then it stops out. But I do like this area for shorts. We see that price has reacted and rejected to this zone before. I did mention before, though, I'd rather see us close back below this zone and then retest to go short. But with that being said, the way we're reacting to this open price is also very nice. So something to keep in mind. Nvidia is still climbing higher. Microsoft's dropping. Apple is now dropping. Amazon is now dropping. Google is now dropping. So those four we were looking at bullish, well, now we have four looking more bearish. So right now, markets are very up in the air. I do expect more of a range than a trend. Me, myself, I'm going to be trying to stay out of these markets. Trading can make you broke, not only money broke, but mentally. Absolutely. Trading is it's 80% psychology, 80% psychology, 20% strategy. Let's take a look real quick. Absolutely. Mel, have a great evening. Get a good night rest. We will see you soon. Keep in touch. Hopefully we get you on an episode sometime next week. I know it is very late for you, so we can get you on like an earlier part of the show so you don't have to stick on for the whole show, of course. We do run these 8:20 to 10:30, guys. And of course, what we can also do, I'm always happy to host special episodes. So I know we have FOMC coming up in a few weeks. That's something else we can take advantage of. Awesome. Sounds good. Will do. Oil. What's oil doing? Oil, range bound. Gold, range bound. NASDAQ, range bound, but still trying to move higher. So I would not be so quick. Like I've been saying all morning, I would not be shorting these highs, but I also wouldn't be going long at these highs. We're at that, I like to call it a rock and a hard place. We have resistance stacking up here. We have support starting to stack up higher and higher down here. We are getting tighter and tighter within the range, creating a no trade zone. Leave it alone. Best type of trade you can take is the trade that you're not taking because it's not making you lose money. Let's see. Any headlines? I think a little headline just came out. Nothing major right there. Non-resident investors pull $30 billion from Korean equities, highest outflow in 26 years. Okay, now listen, this is a headline that isn't a make or break for US equities right now, but it is a little bit of a red flag for the global economy and what's going on and what could eventually start to rotate into the US equities. Because if these investors, these non-resident investors are pulling out of Korea equities, they're most likely pulling out of other equities as well or parking their money somewhere else. So let's take a look at somewhere like the dollar. Look at that, guys. The dollar off of this orange level. That was that big daily zone we were looking at. And it is flipping back bullish on the dollar. So if we're getting a more bullish dollar, we know that that usually has more of a bearish impact on gold. And yet look at gold. Gold is still trying to move higher here. These are trickier markets to trade than something that has a much more clean and definitive trend and strong fundamental bias. Right now, we are in that standstill market where we're not getting much follow through. NASDAQ, man, look at that. Still rejecting, still struggling. Why I'm not going long, why I'm not going short. Because guess what? If we did take those shorts before, could have possibly been stopped out. Oh, markets are moving bullish. I should just stop out now. I knew I shouldn't have done that. I said that before the trade. And then boom, stopped out. Then you tried, oh no, I knew it was working. Try short again. You do not want to take 1,000 paper cuts in trading. Take an entry, take maybe 2 entries. Max 3 entries on that trade. As long as you're looking for a 3-to-1, a 4-to-1 risk to reward or higher, you're going to be in a good position to be able to take multiple trade executions and opportunities. Right now, we're not in that good trade opportunity. We're going to leave it alone. What's up, Sharmy? What's going on? Have really enjoyed Kevin's market analysis. His insights are very helpful. Have helped me better understand the market and improve my trading decisions. I'm happy to hear that. Very happy to hear that. Yeah, guys, before we were doing the market in the morning streams, I was doing streams with another community, also about 9 to 11, and just day trading, using different tools, day trading. Now I do have my own community as well. Trading Pioneers is that community. You guys can follow me on Instagram, is Trading with Kev. and I'll send you the invite to that free community. I always want to give you guys as much information and as much I guess information and knowledge as I can to give you guys a better understanding and a better experience in the market, whether it's trading psychology, understanding a different strategy, breaking something down, learning order flow, learning fundamentals. I want to put everything together for you guys to give yourself proper direction and a good follow through and a good system. You need, always stress it, man. You need routine to build consistency in trading, but to get that routine, you need good foundation. You need a strong foundation prompting you up that you have confidence in. You can't be a consistent trader if you're not confident in your system and strategy. If you're not confident in your system, you're not confident in your strategy, you're going to take crappy trades. You're going to find yourself in that eval jail for months on months until you finally sit down and nail it down. A lot of times, like we see with Mel is a mentor herself. People need that extra help. I remember when I was getting started with trading, I've told you guys my story before. Got started year one, I was going book after book, YouTube video after YouTube video, spending 8 to 10 hours a day going through trading education just to feel like I went nowhere. Then took some time, was trading options a little bit. It wasn't until I found a mentor myself that helped me say, okay, listen, we're going to focus on something like supply and demand, give you some proper foundation on the higher time frame. Then we're going to break it down into an order flow aspect. Great. And then the cherry on top of that was really breaking down and understanding fundamentals. That was like the nail in the coffin to say, listen, now you understand these financial markets, not just the candles, not just the order flow, but what's actually supporting, making, and breaking the current trend and the current economy. We got to remember the market is a reflection of the economy. If the markets are at all-time highs, does that mean the economy is doing great? No, absolutely not. A lot of times it's actually the opposite. So something to keep in mind, something to watch, and it definitely all depends on not just where the stock market is, but where are the bonds, where are yields, and where are our reports, right? Where are our inflation reports, our employment data? Everything comes together. All the pieces come together. Housing market, everything, man. Inflation is definitely one of the top that are most important, inflation and employment data, but everything else is just as important too. Let's see. Nothing else major. Let's check our general markets. So general markets, guys, I've been getting questions about this recently too. Market AI Sentiment Index. So that is basically markets fear and greed. I'm sure you guys have seen something. It's called the Fear and Greed Index. I could probably pull it up. Fear and Greed Index. Something I think CNN posts. So they have something where it goes from extreme fear, neutral, greed, extreme greed. Right now, there's at 49. Markets is also at 48, so about 49. This is that range-bound price action. This is where it's stemming from. We know that we are a bit more risk off, but we know that we're not in some type of risk aversion. We know we're not panic selling. We're not even defensive positioning. We are right in the middle. We're not even hitting cautious optimism yet. We are right in the middle, a no trade zone. We want to be very careful. This was also where we were yesterday. And guess what happened yesterday, guys? Yesterday, we had that range. We moved higher into supply. We moved lower to VWAP. We moved higher back to supply. Gave us a much better range to trade. Just because markets are ranging doesn't mean you can't trade them. Sometimes ranges in the market are actually a bit more of a blessing because they're a lot easier to read than some type of trend that the market just keeps on climbing higher and higher. So just something to keep in mind there. And guys, don't forget, join our free Discord community. I'm going to send you guys the link to that right now, our free Market AI Discord community. I'm going to send you the link. You guys post in the general chat there if you want. And you post in the general chat. You could @ me, @Kevin, and I will pop up, ask me questions, share your charts. Always happy to help, guys. Take a quick dive back at our equities for a moment. And what do we see? I think we know what we see. We see range. We see uncertainty. We see lack of follow through. Just a few minutes ago, we were saying how Meta was pushing higher. Now, 10 minutes later, Meta's back pushing lower. Google was also pushing higher. Then what happened? It had a major spike to the downside. Nvidia was at new high of day at 208. Then it dropped down all the way to 206, a $2 move on Nvidia in 10 minutes, just for it to again move back higher to 207. If our equities are range bound, that's complementing our trade thesis that this is a no trade zone and we want to be extra patient. So good stuff on that, guys. Great acknowledging and great noticing when markets are to not be traded. Let's see. Take a look. Look at that, man. Again, glad we weren't taking random shorts on NASDAQ. I said I feel like we still have a ways to go on NASDAQ. We have 29,976 up here. We have 30,000 as our next key psychological price level to watch. So a lot going into this market right now. We're going to wait. We're leaving this alone. Let's see. Yes, same deal. Chopping. So this is something I mentioned like 30 minutes ago, guys, that these areas of supply, part of my edge is that if we're in a supply zone, I'm either looking for a short position or I'm not trading it. And look, when we were trading in the supply zone yesterday and overnight, we were range bound unless we were rejecting it. Now today, look at what it's doing. Look at this choppy price action. We're not pushing right through it. Now, sometimes one of my favorite setups is markets open, we blast through a supply. When I say blast through it, I don't mean we push through it, we pull back, we push through it, we pull back, we chop around like we're doing right now. I mean we blast through it like it's not even there. When markets blast through it like that, leave a big volume imbalance where we have our volume profile up here, a low volume shelf, and then high volume shelf. I would look for that breakout, pull back to that low volume area, and take that long. Right now, we're not getting that. We're still within that supply zone. We wicked out of it a little bit, but we're lacking that follow through. Yeah, US 30, I got you guys. I know you asked for that earlier. I think Guzman also asked for that. I apologize. Let's run through that daily. So we're going to look at YM. YM is the Dow. That's US 30. Previous day low. Let's do previous day low. Is right over here. Previous day high. Now, previous day high was swept on the Dow, and it was rejected. So this was our previous day high right here. We're going to label that so we know what we're looking at. PDH, previous day high. Could label this one as well, previous day low, PDL. Now, something I like to look for when we do get some type of sweep of a high and reversal back to the trend is the opportunity for us to make our way back towards that previous day low now, because it might feel like a big move when in reality, because look, people who are too zoomed in on a 1 minute time frame, like, wow, look how bearish we are. But when in reality, that's not even bearish. That's just keeping us within a range. So it's a very doable and possible trade setup to keep an eye on. That is on the Dow right here, US 30. Piyush, have a great day, man. Great week this week. Good job, everybody. Smash that like, man. If you guys haven't liked it already, make sure you hit that like button. Our goal is 75 likes a stream. I haven't mentioned it too much this stream, so I'm going to just assume it's probably a little low right now. No, you guys are still kicking it. 42, you guys are goated. Keep running that up, man. We got to hit 70 or we're not ending the stream. Well, I guess I shouldn't threaten that or else you guys definitely won't like it. Look at that. Dow continuing lower. I would like the bears more on the Dow here than I would like the bears anywhere else, like NASDAQ or the S&P. We take a quick look at the VIX. VIX was trying to push lower. Now we're consolidating. Pretty weak VIX can lead to a bit more of a stronger S&P and NASDAQ, though. We take a look at gold. And again, look at this, guys. Gold's giving us the same choppy garbage price action it gave us yesterday, where we stayed within this big old range. And now guess what we're doing? We're staying within this big old range. So if you feel like you have to force a trade, one of the trade opportunities you can look for would be a short off near the high of this range. Possibly, when we have range-bound price action like this, one of the better setups that I like to look for is liquidity sweeps and reversals. And what I mean by that would be, because we're so range-bound like this, a lot of times we'll sweep a low and reverse back, but not make those highs. We'll chop around. If we sweep a high, we could reverse back, possibly not hit those lows either, but we still get that reversal off the breakout, because when we're range bound, we don't get breakouts. We don't get breakdowns. We stay within a range. We get fake outs when we're within a range. So something to keep in mind. Could also look for a possible VWAP trade here on gold too. Again, short term to the downside, nothing crazy. NASDAQ, aren't we glad we're not just jumping in random longs here? I'm giving gold a miss till next week. Yeah. Very smart move. Yeah, I'm leaving gold alone myself. This is some horrible price action. Shireen asks, Sharm asks, what am I thinking about gold? So I did just cover gold. Gold has been very range bound. I was looking for more of a continuation when we were below 40.90. Unfortunately, we swept those 40.90s and we have made our way back within that range. So as long as we're trading, and guys, something to note, when you're trading, you're not just looking at the candles. You're not just looking at candles. You're looking at price. You want to look at the price levels too. So if gold remains within this range, of, and I'll mark it out for you guys so you could see it again, 40.90 to 41.15. Yeah, exactly. This is choppy. This is a no trade zone. This is not something where we would find an A plus or a high probability setup. This is a type of trade where you could go long here and then it could stop you out. You could go short here and it could stop you out. There is no reason to be trading markets when they're confined within a range like this. Saif, what are you saying, brother? BB? Hey, BB. Hey, boo boo. NASDAQ trying to reject supply, and then what's it do? Buyers keep buying the lows over here. They keep trying to support near that 29,900 area. Really just a matter of leaving it alone, because guess what? You could go long here thinking we're holding, and then it could sweep through and stop you out. Stops you out, you think you should go short now, then it holds VWAP, and it moves higher again. No trade zone. Leave it alone. Volume is also much lighter today. Something you guys can do, a little bit of a trick for you guys, this is NASDAQ right now, is zoom out. Zoom out to those past days, and don't just look at the price action. Look at the volume. This volume was up here. This volume was all the way up here, all the way up here. And these days we had more consistent moves. Whereas today, way down here, and it's been declining. It's been decreasing. The volume has not been picking back up again here on the NASDAQ. So without volume, there won't be momentum. Momentum is followed through by volume. There is no volume, no trades. If the big institutions aren't trading it, why would we trade it? Now, I saw something else in the headlines, a bit of an article the other day I was reading, and it was mentioning how summer price action can sometimes lack that volume and lack that follow through, right? They call it summertime price action. And the reason for that being, it's summertime. A lot of big institutional traders, big people, big hedge funds, they're taking vacations, they're taking extended breaks, and that's going to pull and leave out a lot of volume. Is it going to make it impossible to trade every day? Absolutely not. It does just add a little bit more of a harder market environment. And it's important that as traders, we understand what that actual market environment is. So something else I always like to keep an eye on, 15-minute time frame, 30-minute time frame. How are they trading? Hourly time frame, right? So last hourly time frame candle we had was very bullish. Why would I look for a random reversal here? However, I also know that we're very range bound and near a resistance point. So why would I look for a long when I know we're at the high of a range? Trendline guys see a breakout on 15-minute. Okay, we'll see. 15-minute breakout, and then meanwhile you said that, and then it just dropped. So keep an eye. Again, this is an area that I would not look for longs because we're in an area that we've been rejecting. I'd be looking for shorts, but I also wouldn't be forcing any trades in this type of market environment that I know is very range bound. Do I really want to put myself and expose my account to this type of price action that I'm most likely going to lose on? We have to be able, your edge is your strategy, your edge is your system, but your edge is also having the ability to understand and know when to trade and when not to trade. Guys, keep running that like button up, man. We're a few likes away from 50. We want to surpass that. We want to hit 60 today because you guys are goats. And this community that we're building here with Market in the Morning is unstoppable, man. We got 10 more minutes left for a Market in the Morning stream. So any comments, any questions, please feel free to drop it in the comment section below. Always happy to help you guys and give you insights when and where I can. Let's see. Let's see. VIX still trying to make new low of day, which would be bullish. What's up, Ryan? Oh, what happened, bro? What happened? Can't believe I failed. Oh, you failed the like. Brother, you're good. You're good. Guys, make sure you run that like button up. Trend line actually goaded on higher. Are you talking about just general marking out trend lines? Because I'll tell you what, guys, trend lines are something that could be very subjective. You could mark a trend line out right here, go from here to here, and say, oh, price has to come up to this trend line now, right? And then it doesn't. And then you could be like, oh, well, actually, that trend line was more like this. And subjective, right? You could change how you mark that trend line out. In my opinion, trend lines are something that's very helpful to give you an idea of the range, not to give you an exact support or resistance, to give you an idea of a range and to work as a one-off confirmation. It's not going to be your reason you enter a trade. It's going to be a confirmation to one of your zones. Like let's say, for example, again, this trend line right here. If we had this trend line right here and it ends up lining up within the supply zone, this next supply area, then yeah, look at that. Great. I could look for a short position off the trend line and off of that supply zone, but mainly it's off the supply, not the trend line. Yeah, NASDAQ taking a nice hit. What I tell you guys, this is a sell area, not a buy area. I'm not in it myself. Let's see. NQ. Let's see. Now, listen, guys. We got 3 minutes left. Always remember, another golden nugget for you guys. Remember to look at how much time is left on this candle. This 5-minute candle opened 2 minutes ago. That means we have 3 minutes, 2 minutes and 45 seconds left for this candle to close, and it already made this much of a move. So what makes more sense? That we drop another huge move and this candle's that big, or that we start to wick around here and we wick around, we try to hold VWAP and then possibly fall again, or we wick around and we hold higher and we make our way back to those highs again, stopping out the people chasing shorts at lows, whereas we should be buying low and selling high. So I'd be very patient on this 5-minute right now. We have 2 minutes left. If it can close somewhere above VWAP again, like this one did, I would think this is lining up for a short-term bullish move. And if I am looking for it, I would take it to target that open price. I would not look to target new high of day, or I would do TP1, so take profit 1, and I would take off 50 to 70% of my contracts, and then take profit 2. That's where I would leave my runners. So I would take the contracts off at take profit 1, move stops to break even on my last few contracts, and let the last few run to take profit 2. Risk management and trade management is very, very important. Good stuff, guys. Good stuff. Let's see. Oil. What's oil doing? Trying to move higher, but oil also is rejecting. Look at that. That's the oil open price right here. And look at, it's a purple level. I'm going to make it a bit thicker so you guys could see it. There she is. Support when we're above it, resistance when we're below it, support above it, and now here we are trying to act as resistance while we're below it. I do want to check the weekly time frame on oil. It does look much better off that we're trying to hold lower. Now, something we will keep an eye on is if oil can break back above that previous day high and try to hold, then yeah, it looks like oil's going to be right back within that range. Let's see. Time frame on VIX, 1 minute, 5 minute, or keeping it consistent with the same frames I'm looking at. Keeping it consistent, brother. Always keep it consistent. You're trading on a 5-minute on ES, you're looking at a 5-minute on VIX. Look at that, guys. What'd I say? Excuse me. 3 minutes was plenty of time for it to look like we're closing down here, trap a whole bunch of sellers who thought, oh, there it is. Here's the sell-off from supply. Got to go short down here. Bang, they just got stopped out. 10 seconds left. Looks like we're trying to hold up here. Boom, there's pain to all those sellers. So very good stuff there. Good breakdown, good analysis, and great follow through and great example here on the charts. We can now look to see how do we want to hold VWAP? Do we want to hold it and make our way back towards the open, or do we want to fail it and continue on lower? But what we have been seeing is we're trying to hold it. So I would be very patient. I wouldn't be forcing anything. If we do start to hold, let's say we don't sweep this low and we hold VWAP, I would look for a long, like I said, targeting either here or the highs that we were at. But if we break this recent low, no long opportunity at all. Let's take a look at the VIX, see what VIX is doing at this point. If VIX is moving higher, most likely look to stay out of the NASDAQ. We'll put VIX in this chart right here. By the time we bring it up, NASDAQ's probably going to break that low. Yeah, so look at that. VIX is trying to move higher. So again, leading us to believe that we're in that rock and a hard place scenario where we're not getting that follow through. We're lacking follow through in the market. So if we're lacking follow through in the market, why would we be expecting follow through in our trades? Markets are always right. Just remember that. Markets are always right. It's not letting me expand it. There we go. Look at that. Apple, new low of day. Microsoft trying to sell back off. Nvidia trying to hold. Amazon trying to dump. Google, 50-50 coming off of new low of day. Meta also trying to break lower, but still above its opening price today. We're in a 50-50 zone. This is unfortunately a big no trade area today. Look at that though. NASDAQ did try to hold. I did not take that trade myself. Up to you guys if you want to take it. Again, do your own analysis, have your own confidence in your trades, your own reasons to enter a trade, something that you can follow every single day. Don't want to be forcing things. Now, something else to mention, like I said before, though, I'm not a fan of going long into a supply zone. However, I did note that we haven't been rejecting the supply zone with strength anymore. We've been trying to dig into it deeper and deeper, and we do still have that unfinished business up here at this 29,976. So be very patient, be very careful there. We will see how that wants to play out. Let's see. Lack of volume. Again, look at the volume today. Very low volume. If we have low volume, expect very little follow through if there is any. 2:30 left on the 5-minute. Again, we're in a scenario where that's the same opportunity that we could have plenty of time to continue lower, plenty of time to continue higher, and also plenty of time to stay within this area. I'd rather longs than shorts off this VWAP, seeing that VWAP has been holding, but that's just me. See if we rip right up right here. Look at that. That's a good 1 minute right there. That's probably going to have a little bit of follow through. We'll see. We need to see more volume come into the markets here, though, to really scale us up. Got to see a big spike here. Nvidia pumping, Google pumping. So those are good attributes to help the NASDAQ try to move higher. I would have been going long down here near VWAP, not going long up here. This would have been even an area that I'd look to take profit. This is 40 to 50 points in profit right here on NASDAQ in range-bound price action. That's a nice little move right there. That's your piece of the pie. Minute 20, minute 30, bang, another pop. There we go, NASDAQ. Run that up. Run that up. Beautiful. Beautiful. Yeah, I think NASDAQ's heading towards that 30,000 mark. NASDAQ to 30,000. And listen, it might not be a smooth run up, right? Lack of volume, it usually isn't a smooth run up. But because it's still coming from range low to range high, possibly, right? But be very careful, be very patient. Don't be forcing anything if you're not in anything right now. And look at that 15-minute time frame. Look, that's a crazy wick right there. That is on the NASDAQ, a 87-point wick. That is massive. Massive. All these trapped sellers down here, everybody that was trying to sell the NASDAQ out of the supply zone, you guys saying the NASDAQ's dropping. I'm saying, nope, we're looking for it to hold. And then boom, it holds. But now guess what? We know that we're range bound and we know that there's a good chance. Also, we're rejecting the opening price again. But we know that if we're range bound and every time it looks like sellers are going to continue, we reverse. Every time it looks like buyers are going to continue. Look how strong this candle looks right here. And then we reversed anyways. So this is not a trade environment where you're catching momentum. There is no momentum. There is no volume. We ought to be able to recognize that. Ladies and gentlemen, that is a wrap for today's Market in the Morning episode. If you take any trades today, please be very light and careful in size. I definitely advise, and not financial advice, but advise you to be careful. Size down if you take any trades. But if you can, have that discipline and don't take any trades until we find ourselves out of a range. It's something you guys can do to give yourself that edge in knowing when to trade and when not to trade is marking out the current range. If I see that this is our range right now, I can't take a position until we either break it to the downside, and then I can look for us to reverse back into it, or break a strong break to the downside, reverse and continue. Strong break to the upside, reverse and continue. But as long as price, and remember, we're not just looking at candles, we're looking at price. As long as price stays within this box, leaving it alone. But I do think we're going to continue a little higher, head towards that 30,000 today on NQ. Guys, it was an absolute pleasure. I appreciate you all for being here, running that like button up, hitting it to 52 right now. Run that up to 60. You guys are absolute legends. I will see you guys all back here on Monday. Have a great rest of your day and have a great weekend, everybody. Peace.